Okay, well, no waiting. I get to just jump right in, so this is good. Thanks for having me on to the show again. I always enjoy presenting here. Thanks for all the attendees for showing up on a Saturday morning. And again, as Renee said, I'm Dean Jenkins, founder of FollowMeTrades.com. And today I want to talk about how I combine two great trading systems. I call it East meets West. It's the Ichimoku Cloud and Elliott Wave. And I said when they agree, good things happen. Profits explode. So during this presentation, please ask questions as we go through it. And I'd love to hear your questions. We'll look at some of your charts and see if we can find any good trades here while we're on the phone here today. Before I get started, everything I'm presenting is for education, information purposes only. I'm a trader. I'm not a financial advisor. So I'll show my methods for analyzing the markets, for looking at trades. I'm going to point out some trades that I like, that I'm in. I'll take some symbols, some charts that you're interested in, give my opinion. But I'm not giving financial advice or investment advice. I'm just giving my opinion. And whether someone takes a trade or makes an investment, that's strictly their decision, their choice. They assume the risk for that. So before I get into the presentation, let's just look at a couple charts. We're going to talk about the markets. I like to have a chart in front of me. It just makes it real. I want to show you a trade first that I'm in right now that I published to my subscribers. So this is a symbol MO. It's Altria Group. And I like to show this because it shows the pattern that I'm looking for actually playing out in real time. So we got into this trade at $67. You can see I've got a light blue line here. That's how I mark my charts up. That's where I take an entry. I've got my stop here at this red line. You can see my stop is now above my entry because we're trailing it up, managing this trade. We've taken some profit on this already. So this trade is a winner. I've already taken profit up above my entry twice. I've got my stop above my entry. So even if it comes down and hits my stop, it's a winner. And what I'm trying to do is follow this trend for as long as it's going to go on. And I've got a target zone defined by Fibonacci extension lines up here above $74. We're just going to try and ride this thing all the way up into that target zone. So that's an example of a trade that's kind of mature. We're into it. We've been in it a while. Here's another trade that we just took. And if you look at this pattern, you can see there's an impulsive move, there's a corrective move, and then the next impulsive move. And that's Elliott Wave being played out before your eyes. And I'm going to show another chart where it looks almost identical, right? It's just a little bit earlier in the trend. And of course, we want to get in earlier. So here's one we just took. This is Baxter, symbol BAX. And you can see how similar that pattern is. And so there was an impulsive move, there was a corrective move, and here's the next impulsive move. We got a target zone up here at 52.87. And there's a really high probability this is going to do the same thing that MO is doing, and we're going to manage it the same way. We're going to take some profit along the way, we're going to trail our stop up, and hopefully get into the position where we're at with MO right now, where it's a winner, right? The only question is how big it is. So those are the kind of trades we look for, and we look for them to the upside like this, and we look for them to the downside as well. The same exact pattern on a bearish chart. Scott's typing in a comment that the Walmart trade, so I am in a Walmart trade, a Walmart short, and he says it's not working out. I think it's going okay, actually. Look here, here's the exact opposite. Here's a big impulsive move down, a nice correction, and clear evidence that the next move down is starting. Now, price doesn't move in a straight line. You can see in this downtrend that we're in a clear downtrend, clear down impulsive move, right? Lower low, lower high, lower low. So the fact that it's pulling up a little bit after our entry doesn't concern me at all. And you can see it's hitting the Ichimoku Cloud, which typically provides some resistance overhead like this. So I think we're in good shape on Walmart. I think it's just got a better entry price right now than what I actually got. Every trade can fail. There's no guarantees. There's no free lunch on Wall Street. But I still like this trade a lot. I wouldn't hesitate to jump in. So let me look at a couple symbols, if anybody's got any symbols. And I'm going to jump, once we look at a few more charts, Then I'll explain my method a little bit more detail, what I'm looking for in a trade and the tools that I use. But if anyone wants to take a look at a stock, just go ahead and type in a symbol there and we'll absolutely take a look. And we got more time, so I can slow down, catch my breath, because we got plenty of time, because I guess I'm filling 2 slots here. All right, got a couple coming in now here. BABA. It's funny you ask about BABA, Walter, because we're actually long Alibaba. And I talked about these charts, these patterns that I'm looking for, right? Oops, I typed in the wrong symbol. Go slow, BABA. I looked at that pattern and said, oh, that's not right. Okay, here's Alibaba. And here you can see it had a 5-wave down sequence, and now we've got a really nice wave 3, a perfect correction, just like we saw in those other charts, right? Baxter and MO. And we got into Alibaba at my blue line. That's how I mark my charts up. My blue is my entry, red's my stop, green's my target. So we got into Alibaba at 100.06, and it's up at 100.06, and it's up at 102. So we're early into this trade, and it's looking pretty good. Looking pretty good so far. So I like it. I think there's still a great entry. There's plenty of room to the target. So yeah, Alibaba, I'm in that one. Let's go back up the list. SLV for John. So this is silver, silver trust. I like it. You can see I've got it marked up. I'm actually an SLW, which is similar to this. I liked it a little bit better, but SLV, absolutely, big impulsive move up. Nice perfect correction. Next impulsive wave starting. We got a target zone up here at 1893. I also like that this trades at huge volume. You know, the better volume, the higher the volume, the better for me, better liquidity. And I really like trading a trade like this with an option. Just go buy a call option, a long call option, let it run. So I like SLV. I think it's got a good entry right now. I would have my stop right here at about 1644 under this last little support area here. But that looks good. APA for Eileen. I don't know if I know APA. After a while, you start seeing the same symbols over and over, and you start recognizing them. Well, I've analyzed it, you can see. So this is Apache Corp. And we analyzed this one quite some time ago, and we predicted, here's wave 3, wave 4. We predicted it would get up above 54.48, and guess what? Right into the target zone it went. After the target zone, what happens? Typically an A, B, C correction. So we might be getting this B leg started. I wouldn't, you know, for me this is over. The excitement happened back here in the first 5 waves, and it went right into the target zone we predict, probably from a previous webinar. So that was a nice one, but it's over. All right, PG for JD. So Procter Gamble. This looks nice too. That's funny. Usually I start getting a list of symbols, and I feel kind of bad because I have to go, nah, I don't like that one. Nah, I don't like that one. I think everything we've brought up so far I like. This is good. So PG looks like, there we go. This looks very similar to the charts we've looked at before that I said I liked and some of the trades I'm in. Big impulsive move up, perfect correction. I like it to correct down to Fibonacci retracement zones, 38.2 to 61.8. It made it. Now it's got clear evidence, right? Higher high, higher low, new highs. It's breaking above the Ichimoku Cloud. We've got Fibonacci extensions giving us a target for Procter Gamble up above 95.88. So I like that one. That's pretty good. I should stop while I'm ahead, right? So what I'm going to do, I'm going to shift over and talk about the tools that I use to do this kind of analysis. Okay, and then we'll go back and we'll look at a few more charts. So the fun will continue. And I'll share a couple more trades that I like as well. But we've seen some good ones already. Let me go back to my presentation. All right, so back to slideshow here. So I already did the disclaimer. So I'm going to talk about the tools that I use, and we're going to talk about Dow theory, Ichimoku Cloud, Elliott Wave, really, really simple stuff, how I use them together, and then we'll scan for some stuff. So here's the three key tools that I use: Dow theory, Elliott Wave theory, Ichimoku Cloud. And I keep it all really simple, really repeatable. I like things simple. Okay. So Dow theory. You know, there's a lot more to Dow theory. This was Charles Dow back at the beginning of the 19th century, 20th century, early 1900s, I believe. So Charles Dow, yeah, the Dow Jones is named for. He wrote quite a bit of theory about the markets, and a simplistic part of what he wrote about the markets is about trends. How do you know when you're in a trend? So you know you're in a bullish trend when you have an unbroken series of higher highs, higher lows, higher highs, higher lows. That sounds so obvious, right? But it's an important tool not only to know when you're in a trend and is it continuing, but to know when it's changed and when it's ended, right? Because any point along the line here, you know, just like we were looking at Walmart, right, and said, you know, hey, Walmart's not working out, but we were able to use this theory and say, the downtrend is still intact. It has not been broken, according to Dow theory, right? So uptrend, higher highs, higher lows, higher highs, higher lows, downtrend, lower lows, lower highs, lower lows, lower highs. And that trend is continuing unless that pattern gets broken. And what we mean by broken is, like on an uptrend, if put in a lower high and then take out that previous low, that tells us, that uptrend may be ending, right? The pattern for an uptrend, the definition of an uptrend has been broken. Same thing for a downtrend, as long as we got lower lows, lower highs, but when we go take out those previous lower highs, right, with price, there's a good chance the trend was broken and that maybe at least a corrective wave to that trend is beginning. So that's important. Again, it sounds simple, but a lot of things sound simple till you hear them and use them in practice, right? So I said I also use Ichimoku Cloud. I like it a lot. Ichimoku Cloud was developed by this gentleman, Goichi Hisada, back in the 1930s. Interesting that he was developing this about the same time that Ralph Elliott was developing the Elliott Wave theory that I also use. But Goichi worked on his theory for about 30 years, and he finally published it in a book in 1969, once he finally got it refined and was happy with it and had it all worked out, right? The name Ichimoku Cloud, the full name is Ichimoku Kinko Hyo, means one look equilibrium chart. There's what it looks like on a chart. I've got it on TradeStation here. And a couple things to note. If you've used the Ichimoku Cloud, a lot of people go, hey, did you change the default colors? Yeah, I did. I wanted them to look good with the rest of my indicators, and I wanted green for up and red for down. I wanted it to make sense. And other people may note that there's no Chiku line, if you're familiar with it. I don't use the Chiku line. There are 5 elements of the Ichimoku Cloud that I do use in my trading, in my analysis. Okay, and I'll go through those one by one real fast. So I think the Ichimoku Cloud does a good job of identifying trends and projecting or predicting areas for support and resistance in a trend. Lots of indicators, most indicators, give you a perfect rear view mirror of what has already happened. Very few actually predict something out into the future. And Ichimoku Cloud predicts. You can see that the shaded area of the cloud is being projected several bars out into the future. What it's predicting in this uptrend is a support level. So I think that's valuable. So some of the elements of Ichimoku Cloud, it's got 2 lines. There's a yellow line and a purple line there. The yellow line, I've bolded it here, is called the Tenkan line or the conversion line. It's very similar to a fast moving average line. It's calculated different. If you're familiar with a simple 2-line moving average, the simple moving average lines are calculated by taking the average of closing price, looking back X number of bars, and of course the slow line is a shorter number of bars, and the fast line is less, and the long line or slow line is more bars, and it's just the average of the closing line of each of those bars. Tenkan is calculated by looking and taking the average of the highest high and the highest low of X number of bars back. So a little bit different calculation. I think it's a little bit better. Okay, so but you interpret the line the same way you would a simple moving average, and that is a crossover can indicate a change in trend. So there I've highlighted the purple bar, right, and that's the slow moving average, and it's simply taking the average of the highest high and lower low from a greater number of bars backward. Okay. This green line is called the Senku span A, means going first or preceding, and it forms the faster part of this cloud boundary, and the cloud is the important part here of the Ichimoku Cloud indicator. Okay. The red line is the span B, and it forms the slower part of the cloud boundary. And then, of course, the shaded area between span A and span B is the cloud, or in Japanese, the kumo. Okay. And now the thicker the cloud, the stronger in this case, in the uptrend, the support it's projecting, or in a downtrend, if it's above the price, right, it's stronger resistance. So price is more probable, more likely to break through the cloud when the cloud gets thin. And you can see back here as the trend began and changed, that's absolutely the case. Now we can get, an early signal to go, wow, fast crossed over slow. That might be the beginning of a new trend. And just about every time a trend does begin, you do get a crossover, but there are some false calls there. So we don't want to use that on its own. We do like to see price break above the cloud and have a crossover. Even then we get some false calls, okay? But the cloud is projecting support several bars out into the future, and you can see it's pretty accurate, right? As price pulls back, as if it's making higher highs, higher lows in an uptrend, it's typically pulling back to the cloud, and it provides support until the trend changes. And then we're going to get proof of the trend changing using Dow theory. We'll see the cloud narrowing and finally price breaking down through it. So if I were to rate Ichimoku Cloud and say, in terms of a total trading system, I think it's got some really, really good stuff going for it, but it's lacking some things, right? It's got great trend identification. It can call off some early entries, and it predicts support and resistance. But, the rest of the things that I want in a complete trading system, like, I want a price target. I want to know what the reward to risk for a trade is before I take it. I want to be able to manage risk. I want to be able to manage the trade in terms of taking profit. I want signals to take profit. I want clear signals to move my stop. And I want an exit point. I want to know when to get out of the trade, right? The cloud doesn't give me any of those. So it's got some great things, but I need more. And so I combine it with Elliott Wave. And again, this was Elliott Wave, created back in the 30s, about the same time that Goichi Hisada was working on the Ichimoku Cloud. Pretty interesting. So I know lots of people, when they hear about Elliott Wave, they kind of roll their eyes, right? Or they've tried it, they've read material, and they're frustrated, overwhelmed. It's like, wow, that's complex. Some approaches to Elliott Wave are incredibly complex, and there's dozens of patterns to memorize and charts and formulas and all that kind of stuff. And so if you've seen that and you said Elliott Wave's not for me, I would have to agree with you. But I use a very simple approach to Elliott Wave. This is the only pattern I care about. The only waves I care about are 3, 4, and 5. Those are the tradable waves, right? Those are the only waves I trade. I prefer trading 3. 3 is the biggest move. 5 is the most highly probable move. So if you like high probability trades, just trade wave 5. 4 is the corrective wave. You can trade it, but it can be a little tricky. Okay, corrective waves can be a little bit tricky. So they can occur in bullish or bearish uptrends. And the guy who taught me Elliott Wave, he used a method. It's Bennett McDowell from Trader's Coach, and he literally wrote the book on Elliott Waves Simplified. You can get it on Amazon. It's a great book, and he invited me to write a chapter in it, and so I did write a chapter, and so that book is available on Amazon. It was released last year. And Bennett and I both, again, take a very simple, very repeatable approach to Elliott Wave. And when Bennett taught me, my analysis looks just like his, And the students now that I've taught their analysis, they find trades that look just like mine. And that's one of the complaints, is that Elliotticians can't agree, it's not repeatable, right? The approach we use absolutely is. It's simple. This is what it looks like on a chart, right? And if there has been a big trend, then wave 3 has already happened, right? You missed it, but that doesn't mean there's no trade. And it's actually easier. It's easy to spot wave 3 on a chart if it's there. One of the mistakes people make with Elliott Wave, trying to apply it, is they look at a chart and they go, well, I can't really find the wave count. And the reason for that may be there isn't one, right? There's not an Elliott Wave series on every chart. When there is, it can be very tradable and very high probability and very easy to manage. But you can make a mistake of trying to stare a pattern onto a chart when it doesn't exist. It does exist on this chart, right? Wave 3 is super easy to spot. It's simply the biggest move, the biggest price move on the page. If you see a big price move, you go, it looks like wave 3. Then we can go back and find wave 1 and 2. They can be very small, 1, 2, 3, right? If we have a wave 3, we expect at some point to get a wave 4, a correction. Almost all trends correct, whether they're up or down. After a big, huge, impulsive move, there's typically a correction. And when we see a correction into an expected region, we go, wow, this chart is now following a pattern that I recognize. And if it follows the first stages of the pattern, there's a good chance it's going to follow the subsequent stages of the pattern, right? So we're expecting the retracement to go into a Fibonacci retracement zone of 38.2 to 61.8. If it does, and it shows evidence, clear evidence of then the next uptrend starting, we can project where that's going to go with Fibonacci extension lines. And these are free indicators, right? Everything I'm doing on this chart is free. It comes with any legitimate trading platform. Right? There's no software to buy to do this. We expect a wave 5 if the waves 1 through 4 met all the rules, met the pattern. We expect there's a high probability chance that wave 5 is going to go to the target zone, up to 61.8 to 100% extension. And we know it's starting when we have Dow theory, higher high, higher low, new high, right? And we can use the cloud in conjunction with that. So on this chart, using the tools, right, we see there was no wave. It was kind of in a channel going sideways, and it broke out. We had price closing above the Ichimoku Cloud. We had a fast over, slow crossover. So there was a pretty good shot to get an entry for wave 3, take it all the way up. Okay, and eventually we get stopped out, take our profit, and then we see a wave 4, and then here comes wave 5, right? And we can go ahead and trade wave 5 up into the target zone. And how do we know when these waves are confirmed? Remember our Dow theory rule. You can see it building over here, right? It takes 3 data points to confirm that a real trend is starting. A higher high, higher low, new high on the uptrend. And then over here on wave 5, high, higher low, new high. Wow, we got an uptrend. And right as the uptrend was confirmed, we've got a crossover on the Ichimoku Cloud, and we got price breaking up above the cloud. When we add Dow theory, Ichimoku Cloud, and Elliott Wave together, we go, that's a pretty high probability trade. This symbol we're looking at is Veil. That's a real trade we took, and we made real profit on it. So those are really the tools that I'm using to analyze charts, and we're getting some good success with it. So now if I add this, I come back to my scorecard here for a complete trading system. Right, we got some good stuff going on here with Ichimoku Cloud, and Elliott Wave adds price target, and it adds an exit point for us. Okay, that's pretty good, but I still got a couple things I need, and that's risk management and trade management. I use very strict risk management when I take a trade. Before I get into a trade, I want to have an entry price, a stop price, and a target price, and I want to calculate the reward to risk ratio on that trade, and it better be able to have the potential to earn more if it wins than it does to lose, right, if it's a loser, right? As long as I can maintain those stats, if my winners are bigger than my losers, my win rate doesn't have to be that big. I don't have to be right all the time. I want it to be as high as possible, right? But I can have a 50% win rate, and as long as my winners are bigger in a meaningful way than my losers, I'm a very profitable trader. So I need risk management. I need trade management, right? And I use Dow theory. So as price moves, as I take my entry, as price moves to higher highs, higher lows, I just trail my stop to the previous higher low as new highs are put in, right? Those higher lows are significant support levels. And so I just trail my stop up, and what I'll do is I'll take profit along the way. I will take a third off initially when we cross the first Fibonacci line. I'll take another third when we cross the next one, or we get a reversal up into deep profit. And I'll let the final third run, and I'll let it get stopped out. I'll trail my stop for as long as I can, and once the trend has proven that it's over, that's when I get stopped out and close the trade. That means you don't get the absolute top in a long trade or the absolute bottom in a short trade. That's okay. But what it does mean is I stay with the trend for as long as it's going to run, and that pushes the profitability of my winning trades up, and those key statistics that I talked about, right? As long as if I can make my winners incrementally bigger than my losers, that pushes my profitability over time significantly. So I trail my stops and manage my trades according to Dow theory. And when I put all that together, right, I get excellence in all categories for all the things I need in a complete trading system. And so that's exactly what I use to trade my account. So does it work? Fair question. Let me bring up my website. So here's my home page. And you can see here's a table with my year-on-year results trading stocks and options on daily charts, right? So 2013 and 14, right, we had a raging bull market. It was pretty easy. 2015 got a little harder as the bull market slowed down and we had some pullbacks. Last year was really hard. We had what they called the worst start to the year ever, a big drop in early 2016, and we had a rally, then we had Brexit, then we had the Trump bump, and then we had the market go totally flat. So it was a tough market, so I was pretty happy that we were able to pull out 24% profit when the market was swinging all over the place and then doing nothing. And I show on my website the exact details of every trade I've taken. So this is 2015. Right, every single trade I took in 2015, and by the way, the ones that I publish to people subscribing to my stock picks, I'm taking with my own money. That's how I started. I'm trading my own money, putting this trading method together. People started asking me about it, and I started offering a service, offering education. So every trade I publish, it's in my own account with real money. That's where I start, and then I share that information ahead of time. I'm looking at trades, and I share. I'm not doing the pump and dump thing. I publish the picks ahead of time. I say I'm going to get into this trade at X price if it hits it. Anyway, 2015, 72 trades, 53% won. Again, kind of a tough year. 1.7 payoff ratio, so almost 2 to 1. So the average loser was almost twice as small as the average winner. The average winner was just about twice as big as the average loser. So even with I'd like to have a higher win ratio. Again, it was kind of a tough market. 2016, we hit 20. We were at 50%. And again, when the market's trending, it's easier. When it's not trending, it's a little harder, right? So we ended up 2015, 50% win rate, but a 1.8 payout ratio. So again, nearly double. Winners are nearly double the size of the losers, and that comes from just strict risk management. So let's go back to the charts and see. Let's look at a few more symbols here. Okay, and again, if you guys got some symbols you're interested in, type them in. I think we got plenty of time. Renee, right? We're still good on time. I don't know if your other guy showed up. Maybe let me know if we're okay. What I'm going to do, still good on time. Okay. So let me show you a couple other charts. I have a live trading room. We meet in the mornings at the market open. We're there for an hour and a half. And one of the things we watch companies that report earnings pre-market. and then we see if there's any good trades. We were looking at that on Thursday, and Kellogg reported. Pretty good earnings, and you can see on Friday it jumped up quite a bit, or Thursday it jumped up quite a bit, and then Friday it's kind of hovering there. So this meets all my rules. I've got a really nice impulsive move. I've got a correction right into my Fibonacci retracement zone. It can go out of it a little bit. That's okay, as long as it doesn't go below the next line, which is 76.4. Okay, really nice retracement, and now beginning evidence of breaking out into the next impulsive move. So it's really only got 2 price bars up above the cloud. That's not quite enough. I want to see some real proof, right? I don't want to jump in and have it come down and fill this gap. So I want, a week or two's worth of data. I'd love to see a high, higher low, new high. And there's plenty of room, plenty of time to wait this trade out, right? If we were to take an entry right about now, we got a target up here about 86. That's a nice return, right? 76 to 86. That's like what, 20% or something, somewhere in that range. I'll take that every day. So that's one we're watching, and I was wondering, gee, what's going on in that sector? If Kellogg's doing good, what about their competitors? And we went and looked at General Mills. So you get to choose, do you want cornflakes or do you want Cheerios? Here's General Mills. Pretty similar. Big impulsive move up, nice correction, channeling right now, but up above you see as it channels, the Ichimoku Cloud's getting thinner and thinner and thinner, predicting a break in a direction, right? So let's see if it can break. I'd like to see General Mills take out this last high, and then we would have a higher low, new high. So if we can bust out above about 64.05, it might be a real go. So I'm waiting on Kellogg, I'm waiting on General Mills. Let's just see which one kind of closes the deal first and ends up, being the higher probability trade. But both of those have real potential, and we're watching them really, really close. So if there's other symbols you'd like to look at, I got a couple that I didn't get done left over. But any other symbols, be sure and type them in, and I will be sure and look at those for you as well. I love looking at charts, talking to traders. It's good fun. So while you're typing your symbols in, couple things. I run a stock picking service. I publish trades to my people that subscribe, of course, right? And I'm posting a link in the chat area there. So there's a link. I offer both short-term and long-term picks. Short-term are on 10 to 60-minute charts. I publish a handful of them a week. We're in them about a day to a week. And then I publish long-term picks off daily charts. We're in them about 4 to 6 weeks. If you sign up for the pick service, you get both. You get access, and you can, take one set of trades, take the other, take them all. It was too hard to try and segment that, so I just lumped it into one service, so you get it all. I do have actually 6 high potential trades you could get entries in right now. So if you sign up for the pick service, you can, today you will have access to 6 trades that we're in that still have great entries, and you can have your order set up and be in those Monday morning. With the service, you get to try it for $39, and then there's a discount after that. The list price $127. It's a good deal. People are making money. You can get it for $97 a month. Try it for the first month for $39. Right? You can try it. You can cancel anytime. It's month to month, right? Try it for $39. If it's not your deal, cancel. That's pretty cheap to check it out, and you're going to get 6 trades that are ready to go right now, and then every week new trades. So if you're interested in trading stocks, getting some great ones like I've been showing you here, give it a try. $39. I like trading with options. I sometimes take the shares. It just depends on how much capital I got available in my account, the price of the shares, the price of the options, all that kind of stuff. I publish the data to trade it both ways. Some people like to buy shares or sell them short. Some people like to trade with options. So what I do is provide the parameters either way. You can trade it with by buying the shares, or you can trade it with an option. And in my updates, I give updates. So however you're trading it, you can do that. And since I got time, let me show you on the website how that works. Let me just log in real quick. This is what, as a subscriber, you get. So here's the long-term stock picks. So every week I give an update, the details of the trade. So any changes, right? These are all our open positions. So, you know, no change, move to stop, taking profit, et cetera, et cetera. There's an embedded spreadsheet. And this has a calculator to help you determine how many shares to buy and follow my risk control guidelines. Again, risk control is so critical. So let's use an example. Here's Baxter, right? We said this is a new trade that we're in. So what's Baxter? It's above my initial entry a little bit. We're in profit, thankfully, right? We got in at 48.63, it closed at 49. So okay, I still want to get into Baxter at 49. So this thing's built into the website, right? And it says, okay, if Baxter at 49, still got a 1.2 reward to risk. So that's not too bad. And it says if you're going to get in at that price with a $50,000 account, you would buy 307 shares, which means if it hits the stop, if the trade fails, we won't lose more than 2% of our account. And, you know, if you got a different size account, just type that in and it tells you how many shares to follow my parameters. So subscribers get that. I give a snapshot on the open P&L of all my open trades, and then I do a video. I walk through every trade and explain what's going on, what we're doing with it, and we also have a midweek chat session, so everybody who subscribes can get on a webinar midweek. We take a look at the chart, answer questions, and then every trade's got all the details, like Baxter. Say, hey, it's a long trade, it's wave 5, it's ready on Monday, blah, blah, blah. You can buy the shares, or if you want to use an option, right, we're trading it with the May 45 call, right, up, and here's the max premium, right, then I tell, here's the entry I got, here's the price I paid. So that's all available on the website for subscribers. So that's how it works. And then I send email updates if there's a change to the trade, and then I'm adding, like within a few days here, I'm adding text alerts. So very soon subscribers are going to get SMS text alerts. So that's what's going on. Okay, back to the charts. So it looked like Andrew wanted to take a look at a couple charts here. So let's do that. Andrew is interested in EMN. I don't think I've heard of EMN. I was excited to see a new one. Eastman Chemical. All right, so remember I said earlier we were looking at charts. It was like, wow, it's unusual. All the charts people want to look at, I liked. So that pattern's broken because I don't really like this one. And the reason I don't is there's no pattern. Remember I said one of the reasons the ways you can frustrate yourself with Elliott Wave is you can try to impose a pattern on a chart that isn't there, and that's real frustrating. So there's no pattern here in terms of Elliott Wave. You know, it's in an uptrend. It's took out that high, took out that high, but in terms of a wave count, there isn't one here. Doesn't mean it's not a good company. Doesn't mean it's not going up or down. It means it doesn't fit the pattern that I'm looking for, that I know has a high probability. So in that case, since it doesn't, I'm just going to move on and go find a chart that does have one. So nothing against you, Andrew. I just don't like the chart here on Eastman Chemical. DPZ. Dominoes. So here, you know, what an uptrend, huh? What an uptrend this has been in. Wouldn't you have liked? I showed a couple of breakout patterns, right? Either here or here, that we could have used the indicators and we would have got a good entry signal. You know, using Ichimoku Cloud, we were expecting, because it was in such a channel, we were expecting maybe a wave 3, a new trend, and we got, you know, a crossover, price breaking above here. We had higher highs, higher lows. So all my rules would have been met here and here for a nice entry. But that was last summer. Here we are in February, and this is a very long mature trend, and it's way too late to get in. You know, it may keep going up, but all trends correct at some point. And this will correct at some point. And so we got to wait. Unfortunately, we got to wait for the correction, and it may be tradable. The correction may be tradable, and then the next impulsive move may be tradable. But we're a little late on dominoes. Great chart. Not a mediocre pizza, but a great chart. All right. I'm behind on questions. I didn't scroll, and it looks like we've fallen just a little bit behind. Great. Let me try and catch up. So UPS. Let's look at UPS. JD's been waiting patiently for that one. And I see there's a couple questions, and I'm going to get to those. UPS. Yeah, we tried to trade UPS. It doesn't work, right, all the time. No system's perfect. We tried to trade UPS on a 60-minute chart, and you can see there was a nice bullish move, a correction, and we were trying to catch this next move. Earnings came out, and it just totally tanked. That's why we use risk control, right? We took a very small loss on UPS because we were using strict risk control, even though it totally tanked. And so what's it doing on a daily chart? And it's kind of a mess right now, right? With that big gap down on earnings, right? This could be the beginning of a pretty big correction, but if it is, let's clean this chart up, right? So we can see what we're doing here. It tanked so bad that it may have already be in the corrective zone for a wave 4. So there's not much we can do with this. Yeah, it's already in the correction zone. So the only trade here would be if it starts back up and the next impulsive move, but that seems a little unlikely right now, and it's a little dramatic. So I think I'd be passing on UPS. Nugget for Eileen. I like gold, right? So this is a 3X. This is a gold miners 3X. I like gold a lot. Now this, on this chart pattern, I don't really like this one. It's in an uptrend, but just from a technical standpoint, it had this huge impulsive move and it corrected nearly 100%, right? That throws me off. I actually like GDX better for gold. And somebody asked down the line here, do I like ETFs? I love ETFs, right? Absolutely love ETFs. So they got a good pattern, I'll trade it. And sometimes, you know, I'm watching the indexes, I'm watching the major commodities like gold, silver, oil, right? So ETFs, I don't like trading futures intraday, so ETFs are a great way for me to take, you know, even shorter term, you know, 1 day to 2 day to a week trades with options on ETFs. So I like ETFs a lot. So see how GDX, the gold miner ETF, right? It had a big impulsive move, but the correction stayed within my parameters, and now the next wave is starting. I like that a lot better, just because it's following the rules that I know that have probability assigned to them. It's following it better than Nugget. Okay, Amazon is probably my favorite company on the planet. Right? If I could buy everything from them, I would. But Amazon, from a chart standpoint, it had a nice 3, 4, 5, went right into the target zone. Look how it landed there, just like we predicted it would a long time ago. It looks like that now that 5 is over, we're probably going to get an A, B, C. Right? They slipped on earnings a little bit, creeping back. Not really tradable for me at this time. Already, you know, the big high probability thing already happened, and from here it's a little uncertain. So I'm gonna steer clear of Amazon as a trade and just go be a loyal customer on the website. All right, yeah, so Walter, I absolutely trade ETFs. TWLO. That's interesting. I don't recognize that symbol. Twilio. Okay, it looks like a limited data, so they probably IPO'd back here not too long ago, and there's not enough data here, and this pattern, kind of like I was showing on Nugget, right? Huge impulsive move, nearly 100% retracement. That's not a pattern I'm excited about, so I'm going to pass on that one. PPLT for John. Well, this is interesting. So, ETFS physical platinum shares. Okay. Volume's a little low, so I would be careful about that. I would watch the volume kind of carefully. Retracement was a little deep on this one, so I think I'm going to pass on that one for those two reasons. The chart's a little weak and the volume's a little thin, so I think there's better trades out there. Walter is clarifying, do I trade ETFs like QQQ, SPY, IWM? Yeah, absolutely. I'll trade anything that's got good volume and has a good pattern, right? So the indexes have been tough, right? They're, the stock indexes are at the end, at the top of a bull run, right? So trying to catch a trade, at the end of a trend, if you go look at, pick one SPY, right? Trying to go long up here, particularly if you look at it on a weekly chart, right? Kind of late to the party to be going long here, don't you think? I think. So I'm waiting for the correction someday, right? Maybe weeks out, maybe months out, but all trends correct. So I'm kind of waiting on the correction to trade the indexes, but I find there are commodities and individual stocks that have outstanding patterns, so I'm trading those. But the major indexes, too late to go long, too early to go short. Eileen, the trades I suggest, are they in options? Yeah, so what I showed, I'm not sure if you were here, Eileen, but when I publish a trade, I give the parameters to buy the stock or sell the stock, right? We're in, BABA, we got in at 100.06, stop 98.40, target price 117.10. So you could just go buy the shares and follow this, and I'll give updates on taking profit, moving the stop. Or if you want, so you can trade it with shares, or if you want to trade it with options, I give an option contract. For BABA, it's the April 95 strike call. So both ways, your choice. Bruce is saying, hey, for that veil chart I showed, it had several pullbacks, blah blah blah. It did lots since the trade. Hey, our trade was over, man. When it was following an Elliott Wave pattern, I got into the trade. I managed the trade according to my strict trade management rules, and when it was over, we took our cash, took our winner, and moved on. So I hope that answers the question. We have a very specific way to manage a trade, right? Once we're in it, there's really no decision making, and there's certainly no emotion about what we do once we're in the trade. I got very strict rules about getting into a trade, and then when I'm in, it's very mechanical how we measure, how we manage the trade. Where do we take profit? Where do we move our stop to? When do we get out? It's mechanical, and we just follow the program, and it produces pretty consistent results. JD, do you need TraceStation so you can get the same indicators I have on the bottom of my charts? No, these indicators down here, right? These are commercial indicators from Traders Coach. They're good friends of mine, and we work together a lot. I think their indicators are awesome. If you're going to subscribe to my service, just follow my picks. You don't need indicators. You just follow my signals. If you want to use the same analysis I'm using, these indicators are helpful. There are some free ones that are close but not quite there, right? You can configure a MACD and an RSI to be pretty close to this, but I think these are worth it. But those are indicators from traderscoach.com, and they show up here and present once in a while. And they work on TradeStation, they work on Ninja, they work on MetaTrader, several of the major platforms. All right. We keep scanning through the questions here. So I did put up the link for my stock pick service. Again, I showed a slide on that. It's $39 a month. $39 for the trial, 30 days, and then after that you get a discount to $97. I also have a live trading room. So we're in the trading room Monday through Thursday for an hour and a half. We get there right before the open, and we analyze the markets. And I do call off some trades, short-term trades, and we also look for key levels on the E-mini. We look at the Dow and the Russell. We look at gold. We look at oil, and call off key levels where we think those are going. Analyze charts just like we're doing here, and share some trading ideas. We watch earnings come out and see if we can identify some good trades. So hour and a half a day, and it's $39 a month. So pretty cheap. But we cover a lot, and there's a lot of teaching. Answer questions, and again, you get trading ideas. So folks that are there like it quite a bit. And I've just posted a link. So if you're interested, for $39, give it a try for a month. See if it's a good fit for you. Okay, I've been talking a long time. We looked at a lot of charts. Renee, how we doing? You got your next speaker teed up? You want me to keep going a little bit longer?
Yeah, you still have it until 1:45, but I can definitely see if the next guy wants to start a little early as well.
Okay, well I can hang out. I can keep looking at charts, and I got a couple more topics I can cover if people are interested. But if the next person shows up and is ready, just let me know, Renee, and I will
Will do.
cede the stage. All right. One of the things I like to do, people ask, how do you go find trades? How many thousands of symbols are there out there, right? And so one of the things I do is I have a scanning methodology. And so here's the S&P 100, so the biggest 100 companies in the S&P in the U.S. And I've got them on a 60-minute chart. Let me switch that over to a daily chart, so it'll be better. So what I do, I have, I've got 100 symbols here, and I've got the Ichimoku Cloud indicators on my radar screen here in TradeStation. And what I can do is I can export that to Excel and sort that really, really fast so that I can see, I can find trades, out of this list of 100. I can narrow it down to a handful of manageable charts to go look at. So let me show you how I do that. I didn't have this teed up because I didn't know I was doing 2 sessions, right? But let me show you how I do that real quick. Here we go. So, Excel is a phenomenal tool. You can manipulate the data so much more quickly than you can and like radar screen. It doesn't allow you to do any of the kind of sorting that we would want to do like we can do here in Excel. So let's just go through this real quick. So I'm going to get rid of this. I'm going to go get I want to get rid of this blank column, these 2 blank columns. So if I'd known I was going to present this, I would have teed it up and had it ready for you. So here we go. But you're going to like this, I believe. So I think we're going to find some trades. Right? Okay, I've got a problem. Oops. There it is. I think I had an extra column. Oh yeah, there. I had an extra column that was throwing me off. Okay, I'm back on track. I have some logic that I've created here. So I can quickly sort these 100 stocks. Boom. There. So this logic is Ichimoku Cloud, if there's a crossover, fast over slow, it says, hey, the trend direction is up, and this is just telling me, hey, is the price above or below the cloud? And so if I have a trend direction up above the cloud, I'm going to call that a bull signal. If I don't have both those things, it's false. And if I have the trend is down and the price is below the cloud, I'm going to call that a bear signal. Okay. Now, and then I want to know how far is price from the cloud, right? Is it really close to the cloud, or is it way far away? Because the closer it is, maybe the earlier in the trend we are catching it. So now I can sort this, and let's just see if we can find a bearish trade. I'm gonna sort on bear signal, and I want to have the smallest price there. Okay, so this will give me the highest priority bearish signals, right? Where the trend is down, the price is below the cloud, but the price is really close to the edge of the cloud, and it gives me these symbols right here that may have bearish patterns. So look, there's Coke, right? So now I've got 14 symbols that I can go scan on the charts rather than 100, right? Because 100 is a little tedious. So that's the methodology for scanning. And you can do this with any sector, any group of stocks. So it's kind of cool, I think. So let's go look. Let's go look at here. Qualcomm. See if Qualcomm looks like a good bearish trade. Not really. Kind of a messy chart. And one of the things I teach a master traders class on how to use this methodology. Right. Oh, on a weekly chart. Let's get back to daily. But it's going to look the same. One of the things I teach is you should be able to look at a chart within like 2 seconds and decide whether it's tradable, whether you want to spend your time even analyzing it. I don't on Qualcomm, CVS. And what we'll find is we're going to go through several charts until we get there's only so many needles in the haystack. When we find it, they're good. This one might be ready to correct up, but it's not proven it yet. JD said, hey, Verizon's in there. Would you look at it? Sure. Let's look at Verizon. So Verizon is looking somewhat bearish, but it ended up retracing too high up in wave 4. So that one doesn't look good to me right now. Not good. BIIB. I chose to scan for bearish trades, but if you think about it, the market's putting in brand new highs, so it's not surprising that it might be a little hard to find good bearish trades. There will be bullish trades all over the place. Probably most of them a little late. Okay, next presenter will be teed up and ready to go at 1:30, so we've got about 12 minutes. Okay. Gilead. Look at this. Talk about a trend, right? A downtrend. So I had retracement lines drawn, but it went lower than that, and I wasn't saying the trend was over. When this trend is over, there's going to be a pretty nice correction to it. Now, at current price, now this trend is still on, right? It hasn't changed. It hasn't put in a high, higher, low, new high. Hasn't broken above the cloud. But if it were to end right there and a correction were to begin, and look, there's my 1, 2, 3, where would Gilead go up to in the retracement, right? And these retracements don't have to be based on good fundamentals. They can just be short covering rallies, right? Be any number of reasons. The bottom fishers and value seekers can be coming in. So it's at 66, what the close was, 66.36. It could retrace up to, that's 86. That's a nice return if it ever gets started. So it's not ready yet, but that's one to watch. There's another biotech, right? This is like the poster child. You know, during the election, both candidates bashed him. Valiant Pharma, right? If this ever gets going up, yeah, why do I not take on GILD? Why do I not take the 100%? I'm looking at a retracement to wave 3. Okay, this is wave 1, 2. So I'm taking the retracement from 2 to 3. I'm only measuring retracement of the single wave, not the entire 1, 2, 3 sequence. And that's the method I use. That's been again very repeatable, very profitable. I know other Elliott Wave folks do it different. I like measuring the retracement of the actual wave, not of the entire move. Okay, Valiant. If Valiant ever comes back, look where it could go to. Closed at 1504, and we can't even see what current price action is on the scale here, right? If it ever breaks up off this bottom and starts a retracement, hold on to your hat, man. It's going to be exciting. So no evidence of it yet, right? No evidence of it yet. I got to really zoom it in. But if it breaks above this cloud and gets some real momentum going, you know, at that point it'll be at about 20 bucks. But 20 bucks up to where? Up to potentially 100. I'll be in that trade. But it's not there yet. It's early. We're watching it. XOM, ExxonMobil. Yeah, that had a bullish pattern, and then it failed completely. But it's still, that looks like wave 4, so not really tradable at this time. We already looked at EPS. GE, I think JD wanted to look at GE anyway. Yeah, not. Remember I said within a few seconds you want to be able to determine if there's a tradable pattern there, and you know, this thing's just swinging up and down, up and down. It's not really doing anything. There's no impulsive moves. I don't really like it. I wouldn't try and trade GE right now. Oxy. In today's world, how'd you like to have a company named Oxy? Again, Occidental Petroleum, kind of bearish, huh? Kind of bearish. So on the bearish trades, what I'm looking for, JD, is a good pattern, right? So we go back to Walmart. I think Walmart's got a good bearish pattern, right? You got to look at 3 years worth of data. It's moving kind of slow, but the pattern is textbook. There it is. 3, 4, 5. We're trying to ride 5 down to this target zone down here. That's the kind of pattern we're looking for in bearish trade. Okay, so we're, I guess the next presenter is up at 1:30 Eastern Time, 10:30 Pacific. Yeah, JD, so wave 5 is the most probable trade. We'll try and trade 3 if we can catch it, right? If we can see it forming. Sometimes trade the corrective wave 4, but wave 5 is the easiest to spot and the highest probability trades. That's really the, you know, our favorite, right? I'll take probability any day. So yeah, about the next speaker is going to be up in about 5 minutes. So I'll review those links, right, one more time. If you want to join my live trading room where we analyze the markets every morning, or Monday through Thursday, call out some trades, there's the link for the live trading room. Love to have you join. And if you'd just like to follow along with the stock picks, I'll push that link again. And again, 39 bucks to try it for the first month and get a real feel. And there are 6 trades that have good entries. You can log in today, see them, and be ready to place those trades on Monday morning. And it comes with a consultation. So if you sign up for the picks, there's a link and you can set up a one-on-one discussion, and with me, and we can go through the website, answer any questions you have, right? Can I show you the waves on Walmart, Eileen? You bet. In fact, they're labeled. I was using this one as a teaching. So I got wave 3 labeled here, right? So here's wave 1, 2, 3. 3 is labeled at the bottom. 4 is labeled here, and here's the wave 5 target zone. That's what we're looking at for Walmart, Eileen. Oh, so James, one of my customers, great guy, he's here. He just made a nice comment. I think I can make that public, right there. Great comment. Thank you, James. Glad to have you here. Not only is James a good customer and a surgeon, but he's got a wonderful sense of humor too. So it's a great guy to have in the trading room. His sense of humor is almost as sharp as his scalpel.